But Prashant has moved to the big wall to talk about some of the stock moves in his Market Laser segment. Prashant, over to you.
Well, thanks very much for that. So I'm going to go maybe a little bit against consensus. The wisdom is, and absolutely I agree with it, that in uptrends, you stay with the trend. Don't look for ideas to short or to sell. But maybe you can keep some things on the watch list, right? This is not a recommendation to either go long or short, but just a kind of a watch list, which perhaps is expected to prepare you for what may come. Angel One is the stock that I'm putting up on my sort of screen here. And it's a pretty simple, straightforward daily chart, which I think makes the point. This is the rising trend line, which has been in place for 2 months straight. From the lows in May all the way to where we are right now. As you can see, there are various touch points on this. And Angel One, with these touch points, has risen 45% in the last 2 months or so. We are exactly as of Friday's close on this trend line at about 1708, which was the closing price. And this is the reason why I'm saying a break below this perhaps can, lead to some damage here on the stock. Just a couple of things, right? As I said, big 45% stock rally in just 2 months. I think that is a starting point. Momentum is pretty strong. But at the margin, there are perhaps, some negative factors. So NSE's order, which we highlighted earlier, prohibiting onboarding of new APs, perhaps hurts broking and distribution income, which is a pretty large, chunky sort of income stream for Angel One. From the 1st of July, by the way, client bank guarantees cannot be used towards margin money. Perhaps this is going to lead to some increase in working capital, etc. So this is something which is going to happen, which perhaps I think which we need to keep in mind. On the other hand, capital market activity remains pretty strong. Markets are buoyant, and brokerage income, is highly dependent on that. The stock is inexpensive as well, so it's not as if this is one of those stocks. The ideal setup is where valuations are completely out of whack, and you have some negatives which start to come in, and the stock cracks. Which is not exactly the setup here. The stock is relatively inexpensive at about 15 times F524 earnings. It's expected to clock between 12 and 15% growth over the next 2-3 years, according to consensus expectations. But keep an eye on this one. I think it starts straight away with a 5% cut, which is below that trend line that I put out. But I think a close is always important for the future trajectory on your radar. Back to you.
Okay, all right. Thanks a lot for that, Prashant. Well, let's focus